Hey, how's it going, Virtue Labs? What's up, Beast? Happy Tuesday. Today, thank you for all y'all joining me. Today is on trading psychology. What a perfect day. A little bit of a down day with crypto and Bitcoin right now. Um, so perfect to talk about trading emotions, trading psychology. I know Hypno, you've done some stuff and are pretty knowledgeable in this. I'm hoping maybe I can get you to join in here later if you have anything to share. But otherwise, I'm gonna get started. Um, Something I spent some time doing before you guys came is I went ahead and I made this whole trade journal that I'm gonna share with you guys later. And this thing's really cool. It's got different, a whole summary where you can keep track of P&L and losses. And here in your trade log, the TA, the reason why you entered the TA reasons, um, and then give you the actual. Here's a Bitcoin calculator too you can use for risk percentage. So just trying to give you this practice what we preach here with some of the tools and stuff like that. I don't want y'all to have any excuses. Well, you didn't have a trade journal, you didn't know how to do it, or whatnot. Just do it. Just do it. That's some of the hardest part. Just get over that. So, yep, I want to do that, and as well, I'm making everybody kind of learn TA the hard way here with learning, making sure you understand the basic concepts first. But as I've been talking about, I've been working on some kind of like what I call like a toolkit. That's what I'm gonna call it, is a toolkit for all this beast. Um, and so any of y'all that came here today, whether you're a whale or not, I'm gonna let you have access to use that because I just think it's a powerful add-on to have in our trading, and we'll be there to help kind of assist you if you're not sure where to draw a fib line, or not too sure about the right EMA on the chart, or this, that, and the other, or whether you have a free account or a premium account. And I say that because some of us run into restrictions with how many indicators or this, that, and the other we can use. So cool. I'll introduce that kind of right at the end. So let's get back to our topic at hand here, and let's talk about trade psychology a little bit, guys, and handling emotions. If any of you guys are big poker players or gamblers out there and stuff like that, and you still got some money left, you probably have dealt with this a little bit. So, anyways, on our slides here, this is just kind of where we left off last week, and I just wanted to start there to kind of just make sure we kind of cover everything, or cover everything almost twice. We ended basically the lesson on after talking about market structure and trend lines and horizontal levels, and then we were talking about daily routines to get into marking up, knowing our daily high or low on the chart, having it marked, knowing if the direction is trending bullish or if the direction is trending bearish, and just ready to spot any divergences that would give us kind of the first indication that a trend is about to change. So let's keep going, and this is what we're going to be talking about in everything today. And I hope some of y'all join in the conversation. I'd love to hear some of your feedback. I'd love to know how you guys do it too. You know what I mean? So, trading psychology, trading mindset. We're going to be talking about introduction into trading psychology, psychology introduction, trading emotions, risk management, trading steps before each trade, psychology in trading, focus on charts and trades. Do not be greedy. Trading emotions. How to handle trading emotions. So, I have to tell you guys, like some of this, obviously these things we talk about, it's not like you just get it the first day. Obviously, emotions is a lot like self control and being mature, and understanding, whether an emotion is helping you, emotion is behind the behavior or decision, or if it's something else. So, and we always want to be using logic in our brains. We don't we don't want to really ever be in the practice of trading with emotions. So just keynotes. I want y'all to remember, like, We're trading without emotion is the key. Stick to your plan. Try to understand and accept the calculated risk on your trade. Right? I want everybody should be in the habit of when they're doing TA on a chart before they're entering the trade, right? Because TA is just one part of it, um, and not necessarily even the biggest part, you could say, but the risk management it is. So truly understanding and accepting the calculated risk on your trade, right? Whether that's like we've talked about a 3-to-1 risk reward setup, which is kind of the golden trade we look for, or a 2-to-1 or a 4-to-1. Greed will make you lose money. That is 100% true. There is a phrase we use sometimes here in trading called revenge trading, and that's basically like you entered a position and it went the complete opposite direction. And so basically, you just closed out that trade and told yourself, "Oh, okay, I just lost, X percent, 5%, to the downside, going long. This thing's going short. I had it backwards. I'm going to flip it, make up the loss, and then make even more money probably. And so now I'm going to flip my direction and go short and make up that loss real quick. And you might even leverage more, or you might even enter like a longer trade, a larger trade size, putting you at higher risk. And you might just do it like that. And then the moment you do that, the trade will, price will recover and then start going the other direction you were originally going. It happens for real. And usually when your emotions get involved. When you focus on trading, money comes naturally. That's right. So like we say that to say like, if you spend all your time stressed and worrying about like when, how much P&L you're making, or if you're going to make enough for the month or for that quarter to meet your benchmarks or your goals, you won't be nearly as good in the process in focusing on trading if you have all that going in the background too, and you're thinking about all that. So, we got to be in trading mode, trading mindset. We're thinking about trading. We'll figure out the money later. Anyways, let's go. I put down here too, if you want to take trading seriously, do the 25 trades with a $1 challenge. So, trading mindset. What is a mindset, right? A mindset is like our state of mind, how we feel, what we're thinking, really what we're aware of too, right? So, the greatest, most successful traders find their main reward in the activity of trading itself. That's right. Crazy as it sounds, some of us kind of enjoy this and really enjoy it, being rewarded for it. If you suffer from fear of greed and it's because you don't understand yourself, most traders will lose to the same degree that they understand themselves. Seeking the market as a support mechanism and not as a threatening is the critical difference in achieving success. Right? That's the thing we hear a lot. I hear a lot from you guys, or I hear a lot from new people, new gals. Well, I don't. I'm nervous. I don't know how to. I don't want to trade. I don't. Just start small is the simplest thing, and with whatever you're willing to lose, for example, and divide it by 10 or so, and then just take a few simple steps in trades. What's the worst that's going to happen? You lose that dollar, or you lose. I hate to sound petty, but I'm just saying you have to be willing to accept there's going to be a little bit of a cost to learning, right? But so how can we do this? So many people are good at charting, but not at trading. When you have money on the line, it changes. Focus on the chart and trades, and the money will come naturally. Focus on yourself when you are entering a market. That's right. You can't be thinking about, some new date that you've been talking to or something recently. You just can't. You can't bring any of that to the table. You just can't. Scared money makes no money. I just know somebody love to say that. When you overanalyze, you become scared of taking trades based on your setup. You'll always find something that will not make you do the trade. Let me stop in 1 second too. Here I want to make sure nobody's asking me any questions. Whatnot. Last time there was a few questions and I wasn't paying attention as much in the chat. Nope, nothing today. Well, Anyways, moving on. When you overanalyze, you become scared of taking trades based on your setup. You will always find something that will not make you do the trade. That is true. Uh, it's called like analysis paralysis, guys, or chart paralysis. That can look like many different things, right? That can look like overcomplicated, messy chart, for example, that has just way too has way too many things going on, and you're getting way too much. Really not confluence. You're just getting a lot of noise, and then you don't know. You can't make a decision, or you're not sure, or you're wish washy. That's another way to get analysis paralysis. I always just fall back to keeping it simple, right? Just fall back to the basics. If you find yourself like when I find myself like feeling overwhelmed or indecision, um, keep it simple, right? Keep it to what you know. Keep it to horizontal levels. Keep it to higher time frames, and then just build upon that. Once you have a better understanding, start breaking it down smaller. Think of it like layers. I'm sorry, I keep losing my slide pointer. Emotions and feelings in trades are something that professional traders do not get or block out when entering trades. Professional traders feel connection with the market and have a knack of knowing what is going to happen next. Information, knowledge, edges seem to come out of nowhere. Trading is effortless. Knowing without knowing. How I know. Come on, guys. It's not really like that. Professionals know that they don't have control over the market, but they start to know without knowing, right? Um, for example, since we're talking about mindset psychology, Bitcoin is in cryptos on an amazing run, um, and I'm sure there's many new people, for example, that could have been getting into crypto today, for example, and we're looking at a day like today where Bitcoin's come down from about 68K to 62,000, right? So a lot of new people, like for example, imagine being in those shoes. Like a lot of new people come in, um, and may feel like they, like whoa, they got their butt kicked the first time. But it's about having a solid mind. And I'm sorry, I got lost there. The professionals, you might hear them say, "Oh, it'll come back. I'm not worried," or it's because their experience, their history, the time in the market, they understand they and begin to trust and know how these things play out, whether they're cycles, whether it's accumulation and distribution, just the flow of the market. Um, Kind of some of the best way I can describe it is kind of like waves. Um, there's a flow to the market in many things in this world. Not trying to get all hippy dippy with you, so let's keep going. True story. This is probably not like the funnest thing to hear, but like taking responsibility, like on the real, for your trades. It might not be like the easiest thing to do, might not be the funnest thing to do, but you really want to like help yourself. This this is the time, this is the important part, taking responsibility. A lot of times, unfortunately, I think that when things are good and people are making money and having fun, right, and it should be, that we don't take the time. We don't want to be responsible. It's only when we don't know what to do, and maybe that then we're like willing to be responsible. And so, if you can just kind of get in the habit of keeping your mindset and taking responsibility for your trades, um, you'll be in a you'll have a better sense of reality and a better grip on reality. Um, and if you're taking responsibility, I would encourage you always like just those people you hang out with in the crypto world and call your friends and stuff like that. Look back about like the last 10, 20 things they've told you about. Have you been maybe some of their exit liquidity? Have you been maybe someone else they were just showing? Just saying. Don't put blame on everybody else than you. My broker told me to go along, and I knew it was wrong. The RSI said to buy, and it was wrong. I knew I should have sold, but the wave count was wrong. A key principle is becoming a consistent trader and acting responsibly for your trades. That's right. That's right. A trade journal is a good way to keep accountability and monitoring wins and losses. You need to learn from losses, analyze what went wrong. So that's back to, like I talked about earlier, that I went ahead and I spent a good bit of little time um, creating this trade journal for you guys here. And the nice part about this is, and you can't see because of what on my screen, but it has several pages here. But you can just use this if you would like. Date, time, was this a long or short? Ticker info, your entry price, type of trade. And then right here, guys, on this is like TA to enter. That would be your technical analysis reason. So whether it was bullish, bearish, volume, these are just drop downs you can pick from, and you can actually add to the drop downs. There's a tab down here below, and you can just go ahead and add a new TA reason if it's something you'd use quite a bit. And then you can use indicators used. And this is your initial balance, right? We see up here. Say, I had to put in a number. We get too many errors if we're trying to divide by 0. So this is by default at 10K, but you can obviously change that to whatever you want. And this will kind of really, and I even have a section here where you can put your screenshot of the trade if you want, or any additional notes. But I think that I'm hoping that this will be helpful for you as well. Oh no, I lost my. Okay, sorry about that. But as well too, so down here, if you click on trade summary, it'll give you a summary of all your trades you've been logging. It should work. Let me know if you have any problems. And then this is like a time frame, right? It'll show you your grand totals and stuff. And then I wanted help as well as this. This may not be as useful, but this is a Bitcoin position size calculator. So, like for example, if you are new retail coming and interested in like dollar cost averaging or something into Bitcoin, this is where you basically be putting your entry price, which obviously will be whatever the price of Bitcoin is at that time. And this will kind of help you get an idea of leverage and where that puts you. So yeah, that's going to be, I actually already posted a link in trading sessions for this. If it's something you want to use, right on. Any questions? What's happening on y'all's Tuesday? Huh. Okay. I mentioned, I think, to some of y'all last time that we're here. I believe pretty soon I'm just going to be streaming live on YouTube. And so I'll probably will host them here as well inside the Discord VC for a while, but be cool if you probably can join me elsewhere. I mean, it's with B3L. It's just we're going to be doing it like with YouTube as well. So we were talking about a trade journal. So no questions. I've kind of shown you some of the basics of a trade journal, right? I'm actually giving that to you right now here today, so I won't waste too much time on how you can create one. But there's no exact right way. Just something to keep track and log your stuff. Okay, we've talked about mindset, trading mindset. I keep waiting, hoping Halo's going to jump in here and share some of his knowledge on that. Anyway, so let's talk about trading emotions real quick too. Once again, today's probably a pretty good day for that. We've just now tested all-time highs, and on Bitcoin, we're kind of back down around 62, 63K level. So this may be a well-timed topic. What are negative emotions when it comes to trading emotions? Anybody got any for me? You want to share? Fear, usually directed, fear and depression, right? And if you're sitting there right now like, hey, yeah, I don't really care about any of this, you know what I mean? Just like as long as I make some money. Okay, whatever. Good luck. We just need to be aware of what our emotions are. So like fear usually is directed, correlated to the size of the position, right? We are using, or what kind of leverage we're using. Fear is a key emotion to control, 100%. And when I was just talking about earlier, how there's a term called like revenge trading, um, where usually you're letting your emotions get the best of you. I'm not going to stand in front of you and tell you that I've never revenge traded. It's happened to me, definitely, and I've paid for it. I've lost for sure. I've gotten it right a few times, but the whole point of this is what we're talking about. It don't do it. Depression. That's another serious part. After a series of negative trading, you start to take trades you shouldn't take, not using setups or revenge trading. This ends in a downward spiral of emotions into depression with ideas of quitting from trading. Uh, yeah, like understandably, some of us can get depression when it comes to obviously money, or if we're losing money, or it may not be that, but you may not be earning or making the money that maybe you had initially thought you would. Um, and you could allow that to really kind of get you to come like discouraging. And I hate to see that, and I don't want to lie and say that I haven't seen that happen to people and that it doesn't happen. It does happen sometimes, and usually it's people when they're first starting out and learning TA and trading. Um, I think sometimes, after you kind of get off the first hurdle of learning, and you kind of have some confidence, and you likely should, that sometimes that's when the depression kind of starts to set in a little bit later on. You're not maybe as initially successful as you first thought you would be, but that doesn't mean that you can't or you won't be. There's been many people, and even a few in here that I've met with many times that really really proud of like the work and everything they put in, and it really scared me like to see any of y'all like get discouraged or about anything like that. Everybody's kind of had to do it themselves, and you will too, and you'll get. I mean, that's what being a part of a community is all about, as well. You can ask your fellow members. You can tag me or team members if you have some questions or if you're struggling, even with emotions. We're all people. We can talk. Okay, enough sad emotions. Let's get on. What are positive emotions? Ooh, greed. Say after a positive streak of trades, you start to believe that trades will go always better, and you leave the positions open after hitting the take profits. You should be careful when you start to feeling greedy. Woo! That's that overconfidence. I don't know if any of y'all seen the movie with Jonah Hill, and then when they're playing the cops and stuff. The kids are taking some crazy street drug that gives them, I forgot, it's like called Wi-Fi, I think, or something like that. Be careful of that meme coin Wi-Fi. But it gives them overconfidence. So that's when, like, you're beating your chest, you're doing the Wolf of Wall Street stuff, kind of feeling invincible. And then that sometimes not only could you make trading mistakes because of the false sense of confidence, but also like that's when you're really like all your risk management stuff starts to go out the window, right? Because you're like, oh, you may like write off losing trades that you normally wouldn't, because you're still in that euphoria, right? Like riding high. Oh, here we go. Euphoria. Believing you're unstoppable and you're the best trader in the world. You should not have this type of emotion. When you feel euphoric, take a break. Reduce your position size. That's right. Reduce your position size. Early on in our trading here, we'll always talk about taking profits early and often. The worst thing is to get greedy or euphoria, and say you have some like major wins, and instead of being able to celebrate them, you end up having to give them back right back to the table. Um, don't make that mistake, or don't make it too many times. Oh, I see it. Pausing for one question. I see it might have a question here. Huh. Someone's saying they're not allowed to talk. Oh, that can't be. You guys trying to okey doke me? Got time for trading emotions, manage emotions. So how do we do that, right? We've talked about being aware of our emotions, what some of these emotions are, this, that, and the other. How do we manage our emotions? Instead of giving you a textbook answer, like I'm just gonna be real with y'all. Like I, I'm managing my emotions like through exercise, like a lot. Um, I find it like it not only gives me like a mental break from everything else I do, but it also allows me to 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 just kind of free my mind. And through exercise, I don't mean to sound all this, that, and the other. You know, there's benefits. You get some euphoric feelings and things like that. Also, too, if you know you're feeling upset or and stuff like that, you can just take it out on the road, take it out in the gym. So, trading emotions, we always want to manage our emotions, right? We got to be mature. We got to be managing our emotions. We got to find our center. So you find your center. You be calm. You're not greedy. You try to manage your feelings and emotions. Get in the zone, right? Try to get in the zone. If you had a bad day or other external feelings that are definitely going to affect your trading, be aware of that. That's for real. That's for real. Um, yeah, I mean, the last thing you want to do is like have a big fight with a friend or close one, and then, come with those emotions to trading and totally end up. You have your like we have our emotional state, right? And then you could say your wellness, and maybe it might also include some financial being and stuff like that. The last thing you want to do is wreck that too, just because of one, this little part of your emotions. So that's all the mature thoughts, and then I'll give you. Okay, let's keep going. There's just a few more. Appreciate y'all being here. Risk management. Protect your capital. Okay? Stick to your plan. No trade is always a trade. Leverage is a hell of a drug. Treat it like it. Don't use it often and carefully when you do. So, pretend you have a $20 million account. Would you also manage trades in the same way, or would you be more careful? I'd be more careful. Do your TA and your plan. You know where your risk is and your maximum pain point in order to stop. No trading is also recognizing that there's no trade that have enough probability or the edge is not there. Don't let the leverage ruin your risk management. At the end of the day, at the end of the day, it's all about risk management. You can have the most badass TA tools, indicators, whatever, but if you don't have the risk management and you're not practicing that risk management, and once again, entering the not you're waiting to enter the trade till you know what your risk is, right? We're never just entering without knowing what our risk. We know what our risk is. Trading steps before each trade. Find confluence, pick a position size that fits your account, execute. Right? Last week and the week before, we were talking about trends, right? And we're talking about horizontal levels. We've been talking about trends, market structure, and then as well as when we are identifying a trend, right? And some of these even go into our daily routine. But as we're identifying a trend, we looking for confluence, right? So, and why do we do that? Well, one, to give us help us make better decisions, right? Obviously, but as well, some of those signs that are adding confluence, right, could be also signs later on that appear maybe as a divergence. Um, that, for example, the trend is going to something else is going to happen, right? Especially if it's a divergence, because the whole definition of a divergence, right, is when you're seeing one thing, say your main indicator or whatnot, being price, is doing one thing, but something else like an indicator oscillator you're using is showing you something different. That would be a divergence. Um, so yeah, and like an easy example of that would be last week we were talking about like looking at external sources besides just at our charts. For example, looking at when we're looking at funding fees, right? Say, is the funding negative or positive? Looking at CVD, looking at open interest, right? So we want to be seeing that open interest creeping up in confluence, right? At the same time as our trend. If one of those was doing the opposite of the other, that could be an early warning sign of what's to come. Focus, 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 focus. Right. So focus mentally and physically. I'm not going to tell you what to eat or drink, um, but be good to yourself. Right. Be good to yourself. Okay. These next two slides, we're not going to go into this stuff today, but I just wanted to show you in case this is something you're interested in and want to be a part of next time. You know now. Um, as we're really going to start, my plan is we're going to start really ramping up trading, right? And getting into the practice of it. And we're going to start doing some things kind of shortcuts too. There's still lots to learn in a certain order to like learn that, but along the way we'll take a few shortcuts. Okay, I know we're not sitting here in college class and stuff like that. I know that the majority of us are mature adults. They got other stuff going on in their lives. So if there's something real practical that's maybe a shortcut, I'm not going to hold back. I'm just going to show you and teach you, because time is money too, right? But so coming up, this next lesson I'm going to do, which more than likely is going to be this week, will be is the next one's going to be on these two things. So it's going to be on entering trades, right? And in that, right, you have to understand, we've talked a little bit about trades and setting up for a trade, but even in just entering a trade, right, we're going to be talking and looking at like consolidation. So we're going to be looking at consolidation above support and consolidation below resistance, and learning how to spot whether it looks bullish or bearish. We'll talk about compounding and averaging down and laddering. This is typically when you're entering a position with more than one trade, right? I'm not talking about it's not like you have two simultaneous longs going on on the same asset. It's just that when we talk about laddering, or another very common term is called pyramiding an order size. And any of you guys with the larger accounts, especially trading on smaller exchanges, would know that it's a must. I mean, it really is. Sometimes you don't want to come in and push the price up away from you, and if you're trying to exit, you don't want to be sinking the price. But anyways, the whole point is that sometimes using laddering and like pyramiding, you can really, even after you've already entered a trade, for example, you might be able to get a slightly better position after it's over. So those are some advantages. We'll be talking about trade entering strategies, different options on how to enter a trade, right? Whether we're setting alerts for it, or using some other type of system. And we're going to talk about the old favorite swing failure pattern, right? SFP. Some of you guys probably have indicators on your charts right now, printing SFP as Bitcoin crashed to the bottom right there. Do you know what it means? Do you know? We'll talk about it. Common trade setup. I think there's plenty of people out there that still push it. I think kind of more nuanced belief is it's not as practical. We'll see. And so, yeah, this is where it kind of really, I'm hoping for y'all kind of starts to get like exciting, because this is all about like, kind of getting into like stuff I do all the time, and stuff I want to talk to people that are doing it too, right? Because I'm a trader. I'm always looking for, alpha and everything else. So, yeah, I'll enjoy this just as much. And then the next we'll see is going to be right here on, compounding, averaging down, laddering. So we'll start later this week in trades. We're actually going to do two module chapters here. So, that'll be that. I'll ask again. Anybody got any questions? Y'all want to talk?
Yeah. How you doing?
All right. How about yourself?
Doing great. Sorry, I tried to get up earlier, but I just needed to kind of switch over. So that was pretty timely. Definitely the psychological shit too. You know what I mean? Especially today. So
Yeah.
swings up and down versus reacting to them, or kind of having a position open for longer than you should, or
Yeah, sure, sure. Is there? Do you have any ways you practice improv? Do you? I mean, I know that
Well, I
neither
mean,
none
like
of
you
us are
said, like
perfect.
the build thing is just touching grass. Like I
Yeah.
think it's probably overused and pretty cliche, but like seriously, like if you get your feet on the ground and like walk away
Yeah.
and just kind of reset, or like just get out of a trade and don't have a trade for a while. I mean, if it's all encompassing, like it's definitely easy to just get caught up and glued to the charts. So.
Right. 100%. 100%. Yeah.
And sometimes you don't have to be in a trade. Like you don't have to make all the dollars. You're never gonna make all the dollars. So like,
Yeah. 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 Totally. Earlier on, not today, but we talked about that. Like, not entering a trade is almost like trading in itself. It's practicing risk management. And over trading can be like a real thing too, guys. For real. I don't know if any of y'all. Yeah. If there's no more questions, I'm probably gonna at least I'm gonna end the recording part.